Let's take a look at some charts and information on Ethereum for Brave New Coin. So Ethereum, like Bitcoin, is a proof of work network. Currently has plans to transition to proof of stake eventually. The proof of stake staking wallet is past 6 million ETH now, I think. So that represents ETH that is not coming into supply rather, until proof of stake goes live. Nice little supply sink there. They also have EIP 1559 coming in August, which is an additional supply sink which will burn ETH fees, and the narrative being used is a triple halving effect. We'll see what the issuance in inflation is after the fact. So I'm excited for that to happen because, hey, that's bullish eventually. That may not kick in day one, but it'll have a cumulative effect over time. If you look at ETH's block times, it's a little different than BTC in that the targeting has gone up and down with Ice Age related stuff. So inflation's in difficulty, for example, has gone up and down. But in general, ETH's block time has declined over time, currently near its lowest ever. So with increasing block times, they kind of have to fiddle with the inflation a little bit to make it deflationary. But it's still around 4%. Currently, it'll be less than that after EIP 1559. If we look at the hash rate and difficulty, hash rate declined with price and with China stuff to a smaller degree, maybe 25% relative to Bitcoin's 50%. But it definitely still took a hit based on China and price. If you look at the miners, though, ASICs specifically, there aren't really that many out there. You know, Silicon is basically the monopoly. So most of the ETH mining is actually GPU farms, and we know this because GPU prices are still insane. And we know this because NVIDIA themselves has tried to kick miners of cryptocurrencies sort of off of their use case by throttling speeds and that sort of thing. None of that has worked, by the way. But there's definitely a shortage of high-end, the 2080s, 2070s GPUs, which are still going way past MSRP. So the ETH mining side of things is still alive and well, definitely, which makes me sad as a gamer because I'm looking to upgrade my system here. Transaction counts on ETH, like Bitcoin, are down significantly, and you need this to stabilize. You need this to start increasing again. Unlike BTC, ETH's transaction counts maybe are declining at a smaller rate and are still holding at 1.2 million. You know, despite all of the rosier fundamentals on chain stuff for ETH, price has still pulled back significantly more than BTC has. In general, I think there are newer market participants in ETH, even newer market participants in altcoins. That means they are more likely to buy the tops, more likely to be prone to fear, more likely to be prone to scams. You're going to see them explode in activity on things like NFTs, and that's fine. I'm not slighting them for that. I'm just saying that's what you're probably seeing here on a lot of these on-chain stats, right? You're just seeing crazy activity rise and drop. And this, unlike a lot of other chains, which I don't think is real, I think a lot of this was real. I think there was just an explosion in activity on May 15, 16, 17, and just the decline as a lot of people got liquidated on their DeFi holdings. So even after all that, transaction counts still holding at the 2018 all-time high. So that is very impressive. Average transaction values hit mega all-time highs because fees hit mega all-time highs. Fees in general are down significantly since those highs, as are average transaction values. So you're not pricing out those smaller transactions anymore. The mempool was significantly clogged for several months. All of that has quieted down for the most part, and that isn't necessarily a bullish thing. For chains with activity and poor scaling, to see whether anybody's using the chain, it's a great thing to see the mempool clogged, okay? This isn't like a great user experience. As a user of ETH, I don't want fees to be high. But the truth is, when the fees are higher, that means people are more willing to pay to transact on ETH because there's a ton of speculation going on chain. So mempool was clogged, fees were high. All of that is not the case anymore. And along with gas, which for the most part is holding below 30 sats, holding below 20 sats, isn't necessarily bullish because you need that activity. You need people buying ETH and using it, right, in order for price to go up. Gas and transaction counts and active addresses are a way to quantify that and say, okay, less people are transacting now. right? If scaling doesn't change, if nothing's changed, but gas is no longer 100 plus and it's less than 20, that means we've lost a ton of people on chain, whether it's from scams, right? I don't care. The reasoning doesn't matter to me. If less people are buying ETH and using it for stuff, ETH price more often than not will go down. If we look at the full node size, continues to rise. This is archival. ETH people will tell you, we don't care about this, we just care about sharding. Okay, well, it's still almost 8 gig, or 8 terabytes rather. It'll eventually catch up with them. Nobody cares about this type of stuff until it destroys decentralization, because what happens is fewer and fewer people can run full nodes. You get increasing reliance on centralized services like Infura to run the network, and then you don't have centralization anymore. So it's definitely an issue for the long-term health of any chain, especially one with tons of activity on chain on layer 1. Looking at nodes, there's around 8,000, most of which in the United States, and over the past 30 days, these have increased. But again, until you know exactly the number of nodes on cloud hosting services versus independent people, you can't really have that centralization conversation, because most of this is Infura related or cloud hosting services. You know, when you see nodes drop off 5,000 at a time and get picked up the next day, either the data on Etherscan is wrong, or that's all one service doing that, right? On and off, 4,000 in a day, whatever it is. So that's something to watch for. Again, nobody will care about this stuff, specifically the ETH maximalists. They won't care about it until it's a big issue, and then it'll be the issue. Average block sizes for ETH have continued to increase and still continue to increase, hitting all-time highs even today. So that is incredibly bullish for any chain. It says people are here, people are using it. It has a use case to do something. It doesn't matter what that something is. People are definitely here and staying here despite prices declining, whether it's NFTs, scams, right? It doesn't matter. Speculation, DeFi. Transaction fees spiked big time pre-May 18th, and then post-May 18th have dropped off significantly back to reality. Miners were fat and happy with prices where they were, along with fees being at infinity. At one point, fees were 1,000 plus gas, just unusable for most people, but that has normalized again. So at least the network isn't falling apart at this point in time. Daily gas continues to sit near the ceiling, and this again is arbitrary based on miner voting. They can continue to raise this. I'm honestly surprised they haven't voted to lower this. One possibility is they'll vote to lower the ceiling post EIP 1559, because what you're going to do to these miners is continually make them angry that they're making less and less money. EIP 1559, I believe, will mean that miners make less money, and obviously proof of stake will mean they're making zero money. So if I'm a miner, I am lobbying for a lower gas ceiling so I can make more money to a degree, right? You don't want fees at infinity where people aren't using the chain. But if this really is a triple halving, miners are going to be making next to nothing relative to what they were making, which for price is great, but for miners is terrible, right? If we look at NVT, much like everything in crypto right now, it's telling you it's a massive buy signal. NVT is relative to on-chain activity and market cap. Declining NVT is incredibly bullish. So either NVT is the best signal you can get, or it's just a little off and continues to be a little off. As far as buying opportunities are concerned, active addresses down significantly from all-time highs in May, but still very near all-time highs in 2018 at around 570,000 per day. So activity's roughly returned to January 2021, and price obviously has taken a massive hit on that. Unique addresses, which can never be deleted, continue to sort of increase. Tiny plateau here recently, sub 100,000 per day. But I like to watch this, just every month, just check it, see if there's anything weird. Here's your S-curve of adoption that everybody talks about, and just explosion since then, since 2018. This embodies beautifully the network effects, right? Just continually increasing addresses. This thing has never really plateaued since 2018. So whether it be ICOs, whether it be DeFi, whatever it is continually bringing new addresses to the chain. If you look at MVRV, which is a direct measure of market cap versus on-chain activity, most coins will peak past 2, so meaning market cap is 2 times on-chain activity. Previously, ETH peaked at 4, then it peaked at 2.7. This is the green line here. to 4, and then most recently it peaked around 2.1, 2.2. So still anything past 2 gets into overbought territory. Definitely a metric you want to pay attention to because it has such a high hit rate across every coin. This very rarely will lead you astray. Even with coins that have significant on-chain activity like ETH, it was very clear in that, okay, we're above 2 here, almost to the exact top, between 2.8 and 3.8. Price was, or MVRV was above 2. That was a great sell signal. As far as the downside is concerned, anything below 1 for most coins is a buy. For ETH, it reached 0.3 in December 2018, and that was the bottom. This could also stay below 1 for a significant period of time. It was basically below 1 from August 2018 all the way to July 2020. So it is a buy below 1, but keep in mind, we could stay below 1 for a significant period of time, and price could go way lower. This is for any coin. I'm just saying we're currently at 1.3, so we're not quite yet in that buy zone territory just yet. Looking at Google Trends, they are down significantly since May. Again, not something you want to see if you're bullish. This represents searches. This represents what is ETH, how do I use ETH articles, NFT stuff. Any ETH adjacent stuff is going to get picked up here. Any of the speculative NFT mania got picked up here. My guess is this NFT stuff, it almost surpassed ETH searches in March. But when you see explosions in price like you did for ETH this year, you're going to see a ton of interest, a ton of articles, that sort of thing. And that has all waned significantly. So it makes sense where price is. The exuberance and the excitement is kind of over based on Google Trends. If we zoom way out, look at the 2-year MA multiplier. The 2-year MA is down here. Anything below that is a buy. The 5x multiple is up here. Anything above that is a sell. Not a ton of data here. And again, much like MVRV, when this gets below, that doesn't mean it's a buy and things are going to pop up to the other edge. It just means it's a buy, it's still a buy, it's a buy, it's always a buy. It just keeps becoming a buy until it's not. And it can even keep creeping, snaking in and out of the buy zone. What this does do is give you a plan. It doesn't necessarily give you confidence in that plan. So keep that in mind, because this thing looked terrible in 2018, 2019. In 2020, it starts to pay off. And then in 2021, you look like a genius if you bought in the buy zone, right? 2017, it sniped that bottom, that Pico bottom. Nice Adam and Eve down there. Sniped the top here twice in 2017. And very nearly sniped the top here at 3,800, 4,200, whatever this was on the index. This will change a little bit depending on which exchange you're looking at. But the bottom side of this sits around 1,337. So the buy zone doesn't kick in if you're passive conservative at buying ETH until 1,337. This will creep up over time, much like this pitchfork I'm about to show you. It'll creep up over time, right? These averages will move up. So by the time this gets here, it may be at 1,500. I don't know. That's why you have to sort of look at it at least once a week. Just say, okay, are we there yet, right? No, okay, I wait. So between the 2-year MA and this pitchfork, which continues to show a midline of between 7 and 900, let's say, by the time it actually gets there. I'm not calling this level. I'm saying, look, if this, then that. If we start to break down below these diags, it is very likely that this midline will act as a magnet for price. There are plenty of cases like this, specifically Bitcoin in 2018. Bitcoin overshot that pitchfork by several multiples, ended up coming all the way back down and then dropping below during that bear market in 2019. So it's not all sunshines and rainbows just yet for ETH, even being down 50% plus from the highs. So if you're bullish, you definitely don't want to see any lower lows here at all whatsoever. $1 beyond whatever this low is here at 1650 is playing with fire. You are on thin ice. There is very little volume support on the way down. Interestingly, though, it does not have a death cross just yet on the daily. And when you get a death cross that's slow, like this one, it's more often than not correct. Very much like a golden cross on the other side of things. If you zero out the momentum, right, this is a reversal first, then you zero out that bullish momentum. Then you start breaking lows, and then it becomes a bear market, right? For the most part, we were just mean reverting. down from 4,000 to 2,000 or 1,800. Really, that was just a mean reversion, and the bull trend or the bear trend hasn't even started yet. Good news is RSI is printing potentially bullish divergence here, as RSI hasn't put in any lower lows, and daily MACD is starting to flip subtly bullish again. I don't want to get, I don't want to sound too bullish, but it's got some time. So you definitely don't want to see a death cross here, and definitely don't want to see lower lows. Really, I'm looking at 2K as kind of the line in the sand. If we're above that, we're bullish. If we're below that, it's game over. Good night. See you in 2022 when EIP 1559 cumulative effects kick in. Because as bullish as everybody is on ETH, you can't really see that on the chart. You can't see people expecting EIP 1559 to be bullish. You can't see layer 2 stuff being implemented being bullish. You can't see any of that. I would have no idea. What I do see is a series of lower highs coupled with equal lows, which is very much a descending triangle currently, and you do not want to see this breaking down. Anything below 1780 and things start to get very ugly. And this is reminiscent of BTC in 2018. The 12-hour ETH chart is basically at June 2018 for BTC. And because it's the 12-hour versus the daily, this will resolve quicker. We'll get an answer quicker. It's not going to take another 6 months to figure out what's going on here. We'll probably know by Q4 how much despair we're in. We'll know by Q4 whether or not we're going to reach for 1,500 or less, whether or not we're going to reach for 800, right? We'll know, I think, fairly soon based on this death cross, right? But this is all stuff to watch for over the next few weeks. If we perk back above 2K, even if we put in an inverted head and shoulders here like we did with BTC, right? All that is great and is an excellent trade. But if we don't make a higher high beyond 23, then it's hard to be bullish because you're just filling in this descending triangle. You're filling in successive lower highs every other month until eventually the support gives and you get dramatic downside to 700 to 900. As far as ETH-BTC is concerned, I think ultimately 0.05 is a good target based on Pitchfork midline, based on some EMAs, based on VPVR. I don't really trade this directly. It had a heck of a move in the earlier part of the year. Historically, Q3, Q4 has not been so kind to ETH-BTC, and ETH-BTC has never had a bullish Q4 ever in the history of the pair. So will this be the year? I don't know. You tell me. Lastly, let me just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool, where you can send ETH to USDC or just watch what I'm doing. Completely transparent. You can see AUM allocation performance. You can see me in a bunch of yield plays. You can see me in and out of Aave comp. You can see me getting fills through all these various dexes, including Paraswap, Uni, Sushi, ZRX. And on the DeFi side of things, you can see everything I'm holding. You can see the amounts, and you can see people getting in and out of the portfolio. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.